Bitcoin. As you can see right now, Bitcoin is at 77.7K. It is down right now, as you can see, and we have been pulling back a lot lately. So we're going to talk about this. Remember, I'm not a financial advisor. None of this is financial advice, but let's get straight into it. And like I said, we are going down. We're still trading within a bear flag. So we're still trading within a bearish pattern. And remember all the videos I made previously. If you're new to the channel, well, you're about to know. So there are these resistance areas at the top, which is a 200-day moving average. We got rejected at the 200-day moving average, which is the white line up there going down here. And then we have the 50-day simple moving average, which is now acting as support. So we are going to come down here and touch this 50-day moving average support, just like we touched the 200-day moving average resistance. Now, the main thing is, are we bullish or bearish? So that's what we got to figure out pretty much. And the percent R trend exhaustion here has curved. It's intersected right here. So the white line's the short-term trend, blue line's the long-term trend. They've both curved. Now, this could go either up or down right now. So I guess this doesn't matter at this point. But wherever we see it starting to go, that's where we need to focus our energy. And right now it's going downwards. So we need to focus on that downtrend. Now, we also have the MACD. And I was talking about this. I always talk about this. Higher lows on the MACD, lower lows on the chart, bullish divergence. Higher highs on the MACD, lower highs on the MACD, and the MACD is down here. And then the higher highs on the chart, then we have bearish divergence. So you see on the right bullish divergence, you see on the left bearish divergence. Which one do you think that we have? Well, if you look over here, what do we have? We have lower high, lower high, lower high. Come back over here, look to the left. What do we have? MACD on the bottom says lower highs, and higher highs on the chart is bearish divergence. So we have lower highs on the MACD because boom, boom, and boom. And then we have, what do we have? Boom, 1, 2, 3, 4, 5. We have 5 higher highs. So if you look at the diagram again, we have higher highs on the chart and we have lower highs on the MACD. So one could only think, well, we have what bearish divergence. So that is a bearish signal. We have two bearish signals. We have our bear flag, which is right here, and then we have our bearish divergence on the left here. So that tells us that this is probably going to be bearish, and we're also getting rejected at the 200-day moving average. And then we're coming back down here to the 50-day simple moving average, using it as support. So we'll see if we don't bounce back from the 50-day and continue upwards, then we're going to remain bearish. But if we do, then we can remain bullish until another bearish pullback comes in. So yeah, I would definitely say get prepared for that. I think it's going to come down here to 75K soon. Now, whether or not it's going to continue downwards, I don't care about that. But right now, all we have to focus on and pay attention to is the fact that we're trading within a bear flag and we're going towards our 50-day moving average and using it as support. That's literally all we have to worry about. And the fact that we do have bearish divergence. And again, bearish divergence, people, higher highs and lower highs. So higher highs on the chart, lower highs on the MACD, bearish divergence. So the real question is, will we have another higher high, right? Will we come up here again and have another? I don't think so, because as you can see, there's no more buying pressure that could really happen right here. So how are we going to create higher highs when this is, becoming so low? So I don't think we're going to have enough buying pressure to push that, but anything is possible. Literally anything can happen in this market. So I really wouldn't put that past anything. Like literally anything in this market can happen. Anything's possible at this point. But what we are seeing on the 4-hour chart here, we are coming down on the percent R trend exhaustion, going down to an oversold area. Once we get all the way down there and start crossing and intersecting here, then we'll have a recovery from there, sort of like how I did here and all the other times. So if we do come down to the oversold levels and then have a recovery, that would look like what? It would look like us coming down here to the support, like I mentioned, to 75K, and then having a recovery. So we'll see how far that recovery goes. We'll see if we get rejected at that 79K level after we come back down to 75K. Once we have that recovery from there, we'll see if we can actually get past 79K and then see if we can continue upwards past 80K. So like I said, things are looking bearish, but there's still like a bullish undertone here, which is what's really confusing people. Like it's bearish, but with a bullish undertone. So this is definitely a very confusing time for people. And then we can go ahead and pull up the weekly chart as well here. Now, this is another important thing that I like to talk about here on the percent R trend exhaustion. We've just now kind of intersected here. A lot of times when that happens, we have that pullback continuation downwards. So I think it's going to happen again here. It did it last bear market as well. So we just got to see if it happens on this one as well. And then you can look at the divergence charts. And I know it's kind of sounding redundant. I say this every day. I do the, well, almost every day. But I always say this in my Bitcoin videos. And I feel like some people might be getting tired of hearing it. And I do see that the Bitcoin videos are getting less views. So people are like, oh man, you're always talking. Well, that's because it's a technical analysis. And technically, this is what it's doing. So technically, I got to tell you the same thing again, right? If you want, you can go look up people who do fundamental analysis videos. I do go over fundamentals every now and then, but I like to stick to the technicals. Now, fundamentally, the market should not be pumping. Like fundamentally, the whole market is doing absolute nonsense. Like the S&P 500 is at all-time highs, right? So we got the S&P 500 at all-time highs. We got every stock known to man pretty much at all-time highs. Literally everything is going to all-time highs. So we can't really judge things based off of the highs at this point, because like if the S&P 500 is at all-time highs, that means the top 500 stocks are at all-time highs. But we're inside the worst economic recession that we've had in a long time, right? We're in an economic recession. You know, people are struggling all over the world, especially in the US as well. So it's kind of difficult to say that we're in a bear market and bearish when everything else looks so bullish, right? So it's kind of hard to come back here and look at Bitcoin and be like, oh yeah, Bitcoin's bearish. Because when you look at everything else is bullish, right? So why would Bitcoin be bearish? Now, if Bitcoin were to break out here on this weekly chart, what you do want to pay attention to is this 50-day moving average on the weekly is at about 95K. So if we blew past this range, you would be looking towards 95K for resistance. But again, I tell you guys this all the time. Let's go ahead and take off the drawing. Look at the MACD. Like this is literally all you have to do. It's very, very, very simple. Look at the MACD. Now we've already looked at the MACD on the daily chart and we've already spotted what? We spotted bearish divergence because we had higher highs on the chart. We had lower highs on the MACD. But what's the opposite? Well, the opposite is bullish divergence. That's where you have lower lows on the chart and higher lows on the MACD. So when you come over here and you look at the weekly chart, you see it's a bit different from the monthly chart, or a bit different from the daily chart. Because what do we have? We have boom, lower lows. I knew that was going to happen the second I do this. All these drawings come back. So again, you have lower lows right here, and we can take off all these drawings for now because it's just going to get in the way. But lower lows, boom, boom, boom. And then what do we have on the MACD? Higher lows, boom, boom. We have buying pressure, and now we're starting to get a little bit of selling pressure. So as this comes back down, more selling pressure comes in, boom. That'll be another one, and then more buying pressure comes back in, and then a little bit more selling pressure, and that will be the last low, boom. So when you look at this, this is how bearish divergence works. It's the complete opposite of bullish divergence. But I know I said that wrong. This is how bullish divergence works, because this is lower lows on the chart and higher lows on the MACD. So if we got lower lows on the chart, higher lows on the MACD, we're looking at bullish divergence. So yes, we are going to take off, and we do have a bull market inside of progress. We're literally building the bull market right now, but we still have to create lower lows to build out our bullish divergence. We have to build out the bullish divergence. Is going to create lower lows. All right. So what we're going to end up seeing here is that sell-off, because we're going to start seeing that selling pressure coming in, and then that is going to mark the new lower lows. So as that's happening, we are pretty much waiting for Bitcoin to create the next lower low. Now we can bring back our drawings, and that again, 50K. And I keep saying it over and over and over again, and I will keep saying it over and over and over again. So yeah, 50K is going to be that next range. We had a very, very, very good support here, and we had a lot of confluence here. We just had a lot of resistance in general for this bull flag here. As you can see, bull flags are bullish signals, but you can see how it consolidated so long in this area. From March 2024 to September of 2024, it consolidated. Well, really October of 2024. So from March to October, it consolidated. And we should use that 50K as support now because it was very, very, very strong support. So 50K support, in my opinion, coming soon. So yep, this is all I got for you guys today. I know it looks like a bunch of lines on a chart, but you guys gotta get with the program. All right, you gotta get with the program. It's very complex doing these technical analysis. I know it might look like scribble scrabble, but literally when you zoom out, it is not scribble scrabble. Like, this is all completely necessary, right? The colored areas here is there are Fibonacci's, right? All the colored areas here are Fibonacci's, right? We have a bear flag right here, which is a bearish sign, bearish signal, bear flag right there. We have the 200-day moving average. We have the 50-day moving average. We have an ascending triangle right here, which is bullish, as you can see, ascending triangle, but it's within a rising wedge. Rising wedges are bearish, and I can go on and on and on. I'm just kind of trying to show you guys, like, hey, this is not like a bunch of random stuff that I just drew on this chart. These are actual patterns, and it looks absolutely crazy, but I've gotten them all to it on the T, or on to the T on the dot, right? To the T on the dot. I've gotten all of this correct, and I've been tracking this for a very long time. And yeah, I'm going to keep doing this, guys. This is a bearish expanding triangle. As you can see here, bearish expanding triangles are bearish signals. Where my mouse is, boom. That's what marked the bear market, which sent us down. We had a falling wedge here, which is why we were bullish and kept going around March 2025. Again, falling wedges, bullish signals. That's why we took off. And then again, back here, bull flag, boom, go through there, consolidate for half of a year, and then take off. And then back here, you got all this other stuff, right? So again, I do patterns. I'm like a pattern trader. I love trading with patterns. I love keeping track of these patterns, and they have not steered me wrong yet. Now, bear flags do not have 100% win rate. Bear flags don't have an 100% win rate. So that's something you got to keep in mind. There's a possibility that we can break out to the upside. That's why I keep saying, you know, you gotta watch out for the upside. And if we are going to break out, go to the weekly chart and then turn on your 50-day moving average on your charts at home, and then you can see that's where our next resistance would be, right? Next major resistance at 95K. If, and that's a big if we were to take off out from right here, we would probably get rejected around there if we did that, right? But I'm still bearish here, so I still don't think that's going to happen. I think that 200-day moving average rejected us, and I think we're going to continue downwards. All right, this is all I got. Hit the like button, subscribe. Remember, I'm not a financial advisor. None of this is financial advice. Leave a comment in the comment section. Let me know what you guys want me to go over next. And yeah, all that good stuff. As always, I'll be back with another video.